Tell me your story.
Tell me your story.
How did it all start? Do you remember?
Oh, now what happened? How did it stop?
This is Small Business Origins.
Yeah, what is up, everybody? Welcome back to another episode of Small Business Origins. I'm your host, as always, John Kelley, aka John the Marketer on Instagram and TikTok, John the Podcaster on Twitter. And you're tuned in. It's our nationwide search. We're looking for entrepreneurs that have a story to tell. And joining me virtually in the studio, I've got an entrepreneur that wants to do just that. From Gilbert, Arizona, I've got Aaron Chapman. He's with Security National Mortgage Company. Aaron, welcome to the show, man.
Thanks, buddy. It's good to get to meet you finally. It's a little bit of a battle getting us together.
I know. Yeah. You know, and listeners that are tuning in right now, they have no idea because they could be hearing this in August of 2023 or February of 2024, but I've been on a break from podcasting. I haven't been able to podcast for a while. I've had some personal things going on here, and it's been kind of crazy. And part of that personal craziness that got caught up was you not being able to be on the show because I had to postpone on you, and then we had some tech issues this morning, so we're like 50 minutes late into this thing, but we're here. We're here. We made it happen. We pivoted, and that is like every entrepreneur story. There's always a pivot, and you just got to make it work. So I'm glad we're here, and I'm excited to hop into it. But we always start out with an icebreaker question. And today's icebreaker question, this is a tough one, man. It's which beverage goes best with pizza?
Damn. Everybody's going to go and say a light beer, man, but I have to always lean towards just club soda. I'm one of those guys that's what I drink all the time, man. I can't have, got to be careful what goes in my body these days.
Yeah.
I mean, 40s and you have to start paying close attention. In fact, I'm not eating damn pizza, so that's the other part of it. Give me the naked smoked wings so I can kind of stay on track with how I'm supposed to be eating. So there we go. Anything can go with pizza at this point in my life because I won't be eating that either.
I know. I'm with you. I'm on like a health kick, and I still eat like crap every now and then because I'm a firm believer in, the whole moderation thing. If I just go on an extreme health cleanse, then I am going to just go off the wagon really bad like I have before. I've kind of yo-yoed on this roller coaster of 230 pounds to 280, 290 pounds. This most recent kick, I got up to 282, and I was like, oh my God, I'm almost back to the highest weight that I've ever been in my life. I've got to do something. So I'm back in the gym. I'm working out. I'm eating cleaner. Not perfect, 100% not perfect, but definitely trying to limit the amount of times that we get pizza. Maybe instead of twice a week, it's like once a month, something like that. But I got 3 kids.
One time per month that you freak out a little bit. But yeah, dude, I went from being one of those guys that was constantly in shape, got into a and we'll probably talk about later, very, very bad motorcycle accident that put me in a wheelchair for a period of time. Come back from that, finally got back into shape again, tore my left shoulder, went out of shape, and went bad out of shape, 230 pounds, and then worked my way back just in this last year after I had the other shoulder get torn. It's a whole other story. Both shoulders repaired. This had to reattach my bicep, finally got rehabbed, and the last year and a half, I went at it. I got down to 182 at my bottom, just really, really worked my ass off. And now it's like I put so much energy into this, a year straight of concentrated energy, and I'm like, I'm not going to go off of that ever again. And it feels good. It feels awesome being that. But now and again, I will derail, right? I've had a pizza in the last month. And what sucks, it wasn't that good of a pizza. That's what pissed me off.
Oh, it looked like it cut out on me a little bit there.
Oh, yeah, you did it. Yeah, okay. You did a little jump there.
That's all right. We can edit that part out right there. I got what you were saying. Yeah, it's so easy to go off the wagon and gain all that weight. I just wish it was that easy to lose it because you're right. You got to put a whole year's worth of effort to see the results you really want to see. And then you still have to go longer than that in order to get fully down to where you need to be. And, of course, maintaining it's a lifestyle change. It's not a diet. But I'm definitely one of those guys that 100%, when I have a pizza, I want beer with it. But absolutely, beer is something that I would say I've cut it completely out of my diet at this point, just because I can't afford the calories and carbs anymore, man. It's too bad. It wrecks everything. So if I'm going to cheat and have some alcohol, then I like to do like the little Mio drink mixers and then just mix in like some vodka or something with it, for the alcohol portion. But As far as club soda, man, I had a club soda a couple of years ago, not for the first time ever, but like was steadily drinking it for the first time ever. And it's not bad. A little plain, but not my favorite, but I definitely enjoy one, especially if you got an upset stomach or something. When I had it, I had a really, I don't know what happened, just like a freak illness from or when I was traveling to Cancun on vacation. So my first day of vacation was just wrecked. And I was just downing club soda to make my stomach feel better, and it absolutely helped. So I'm a big fan of it now.
I didn't know that was the thing, that it did that. I just did it because plain water's boring, and you got to give it a little bit of something. Then of course I finally get into the Celsius energy drinks. I don't do the normal energy drinks. I'll do Celsius, but that's about it, man. That's my life when it comes to that stuff. It's really, really, really freaking boring when it comes to food. I eat the same thing all day, every freaking day, regimented stuff. Because I don't get bored with it. I'm not one of those types. So very blessed in that way.
I'm with you, man. Well, before we hop into it, we always have to stop and take a second to talk about our sponsors. So, my question for listeners is, are you tired of juggling multiple platforms for your marketing and sales needs? It's time to revolutionize your business operations with Wingman. It's an all-in-one marketing automation software. It's designed by experienced marketers who understand your struggles. It's a game changer. It combines the best tools to streamline your communication and automate your workflows and grow your business. You can capture leads using landing pages, surveys, forms, and more. Nurture them with personalized messages via voicemail, SMS, emails, and even Facebook Messenger, and close deals with built-in tools to collect payments, schedule appointments, and track analytics. You can say goodbye to multiple marketing tools and hello to Wingman, your unified platform for all of your business needs. Enhance your online presence, manage your reputation effectively, and cultivate leads effortlessly. Are you ready to take your business to new heights? Visit trustyourwingman.com and let Wingman be your co-pilot to success, because every business needs a wingman. But Aaron, we're here to talk about you. Man, where did you come from? How'd you get into entrepreneurship? I ask this every single episode. What's your origin story?
So I spent my high school years on a cattle ranch, and that's where you kind of learn the basic business plan, right? You've got certain things you got to do at certain times to achieve the outcome that you're seeking. Then I had the capability to leave high school halfway through my senior year just because I was really good at picking locks. I did not study for shit, man. I figured out a way to get my hands on the things I needed to get so I could pass those tests and get the hell out, right? And I created a little business there. I'd sell tests. I would trade it for homework and attendance. And I went hunting, I went snowboarding, I went goofing off, four-wheeling all through most of high school, except for the classes I liked: auto shop, ceramics, the sports things that I played. So went out working the oil fields of Wyoming. You start to learn human dynamics a little bit when you start seeing how that works, the educated folks versus the grunts. And then into running heavy equipment, driving truck. Then I had an opportunity to work in the mines in northern New Mexico, an amazing job. Me and my dad were up there working because he'd sold the ranch and went back to mining. I loved it. There's everything about it I loved. It was a simple day. You go down underground several hundred feet. You go to the face of this, what they call a heading. You're driving a tunnel, basically. And you lay it all out. You drill it, load it with explosives. You blast it. You clean it out. You support the ground. You do it again. You go through that cycle. And I enjoyed it because it was predictable. It wasn't always predictable, right? Sometimes the rock come off in a way trying to kill you. The earth was trying to kill everybody down there. And that's the other thing I loved about it. You had no idea if you're walking out that night. So they shut down that project. I came back to Arizona. I was up in northern New Mexico on the Colorado border. I had my wife and son here, infant son at the time. Couldn't find a job to save my life. Hunting. Everybody kept telling me this bullshit word, overqualified. It made no sense to a 23-year-old me what overqualified meant. Why would you not take a person who's fully qualified if not overqualified? I get it now, but I didn't get it then. Finally went to a point where I needed anything. So I applied for a $10 an hour truck driving job to haul landscape rock at a little landscape facility, and they gave me the same bullshit response. So as I'm leaving there, wiping tears from my face because I was that devastated I couldn't find a job, jumped in my truck, headed out to a grocery store because I had a coupon for free diapers. We were out. We were down to our last 2 diapers. My wife had somehow found this coupon. I was going to a grocery store to get these diapers. And as I'm leaving the yard there, the gas light comes on in my truck. I'd never driven it very far with a gas light, so I needed to hurry up and find a place that had a grocery store and a fuel station. So I pulled up to this gas station. I only had a debit card to make payments with, so I swiped that debit card, said a quick prayer, and I got a decline. So rifled through my truck, found a few coins. I don't remember what they were, locked it, closed it, started walking that parking lot. And what seemed like a couple hours, I found enough change to get a couple gallons of gas. Now, this is 1997, when people still carry change and gas was under $1, right? So you could conceivably find enough to get a couple gallons of gas. Now, I don't know that you could pull that off with as expensive as gas is, and people don't carry change. So I went inside after I got my gas, found those diapers that correspond to the coupon. I stood in line, and I don't know if you've ever stood in a situation like this, but you're holding your one item, and when you get there, you need a coupon to pay for it. It felt bad to me. I did not like the feeling I had, but I hurriedly got out of there as quickly as I could and had my head down, avoiding all eye contact, and I heard my name yelled by a guy named Keith. I turned to face Keith, and he used to run the office where I ran heavy equipment digging swimming pools years before. He asked me how things were. I lightly explained how things were. He said, let's go to dinner. I said, I can't afford dinner. He goes, no, I got a gift certificate to Red Lobster from a client. Let me take you and your wife to dinner. That's where he explained he was in the mortgage industry. Now, the only thing I knew about mortgages was the old man and the old lady losing the farm to this thing called a mortgage back on the TV shows you'd watch. It was a very negative word to me. But he introduced me to some people. I shaved. I cut a foot off of my hair. My mom bought me some business-like clothes. I went in there and interviewed, and they started me as a telemarketer in December of 1997. And it was hell to get started in. But because of that introduction and my decision to walk through that door and never go back to what I used to do, I had to go back to what I used to do. I did find another job. I get up at, first I started driving truck to Sacramento and back every week, then to Vegas and back, then work 3 days in the office. I hated that. Then I went back to running heavy equipment, get up by 3 a.m., be the yard by 4 or the job site by 4, be done by noon, be to the office by 2 and work till 10 p.m. every day for a year. And that was sleep 4 hours a night. So 1 year of doing that till finally the interest rates went below 7%. So 6.875 conceivably that I could get loans done. And at that point, then I got enough business to replace my income with the other job and just went into it full time. Fast forward where we're at today, there's over 1 million people in the industry that do the job that I do. Those 1 million people, that have an incorrect stat on my website, I got to correct, but of those 1 million people, I'm ranked number 7 for transactions closed every year. And I focus on the real estate investor because I understand the real estate investor better than really anybody in my industry. And I'm a real estate investor myself. I buy real estate in 6 different states, and I turn it, or I'll hold it, buy it and hold it and rent it out. I'll turn real estate, all these different things. But because of that, I've been able to build a really, really strong national business with a team of about 22 people.
Wow. Yeah, I don't even know where you begin to kind of get into that space. Like, so you started as a telemarketer, but then moved up the ranks, like maybe account manager or something. Like, how did that work?
So after I generated 10 leads, because it got to a point where I generated some good 10 real good leads. I generated a few more than that. Said, hey, you have to feed and let the other loan originators in the broker shop decide whether or not I was good at it. And after I got some of these going, it's like, let me work some of these leads. I actually pulled about I siphoned 4 or 5 more off. Like, mind if I work these leads? These guys got their 10. Let me work these. So they put me with another loan originator, this guy Greg, as my trainer, and said, okay, you got to split the first 10 deals with him. He's going to show you how to do it. So we did, and it was a real hammer and chisel kind of process back then. But he shared with me, and I spent a lot of time really trying to focus on what Greg did. Then I caught on to a few other guys. There's this guy Ed that was in there, and Ed was the way that guy talked to people was different than anybody else. He could get away with saying some shit, which really surprised me. Like, because I'd hear him say something, and I'm looking at Greg, and I was like, who is he talking to? And he goes, probably a realtor or a client. I'm like, how does he get away with this? The shit that he's saying to these people. So I paid really close attention to him. I started to realize you can say whatever you want. It's just a matter of how you say it. And so I started actually pulling from the personalities of the different people within the brokerage, paying really, really close attention to each person. And that's where I kind of built my thought process, or my persona, if you will, around that on the phone. But then I discovered this persona on the phone was very convincing with people that I had created. But when they come into the office and they'd see this, what looked like an 18-year-old kid in there, they would walk out. I was great as long as we didn't have to interact face to face. So that was a difficulty that I'd had for a long time. And then I finally got to the point at some point where I said, hell with this. What I discovered is that I was lying to people with my appearance. Who they talked to on the phone was free to say what he wanted, but the person they started seeing, I was still dressing like somebody else. So that's why I changed to just be me. And it took me a long time to get to that point. But once I figured that out, it's like you literally start to match the face and the face they weren't expecting. The face you're looking at right here is not what people expect when they get done talking to me. But then they see it and like, oh, that now makes sense. And it literally converges in their mindset when they go to my website, and it helps build that relationship quicker. And I don't have clients, man. I have a shit ton of friends all over the planet.
Yeah, that's my favorite way to sell. I don't like it when it's just truly transactional, when all we're doing is trying to sell a product to somebody or a service to somebody, get that money, get that lead to convert, and then move on and go down the road to the next lead. I definitely have a longer sales cycle myself because I'm the one that wants to establish that friendship. So I'm with you 100%. Like it's got to be genuine and real. And if we can't work together because we're just not going to fit, that's fine. There's no hard feelings. It's just I would rather not waste anybody's time and know up front that we're not going to be a good fit for each other. Like that's half the sales process is figuring out who you are, who I am, and if it melds together well. And you're right. Being real is the only way to be as far as presenting yourself exactly who you are, because I think especially nowadays, in the 90s, it was a little bit different with no social media, no widespread internet access and all that stuff. You couldn't call out salesmen on their bullshit easily. It was easy for a salesman to just sell you a load of crap and have you buy it and then have buyer's remorse later, versus now these clients are coming to you well educated. They're aware of what's going on in the industry. They're aware of what they need, and they're aware of if you're good at being able to provide other people with that need before they ever even walk through your door. It's like, I don't know. It's different. It's a lot different these days.
Well, and there's no sales pitch in what we do. It's straight education and straight up consulting. I say, listen, you've got a consultant with 25 years experience with a staff of 22 that also has a combined experience of several hundred years experience, that we are basically here to guide you through this process. The only way we get paid is by closing. So everybody else is selling you a loan. We're actually selling you, and we're not even selling, we're a business partner with you, if you will. And if you don't want that, you don't have to have it. I don't give a damn. It saves me time because I put an enormous amount of time in with each one of our clients because I need them to be better educated. The education they get right now from all the social media and all the stuff out there is still a bunch of sales pitchy bullshit. People that are trying to come to us as a conventional lender, we do what they call their conventional loans, the Fannie Freddie stuff, even FHA and VA and USDA for people buying houses to live in. But we focus on investors, but we do all types of loans. We'll also do your DSCR, your commercial loans. We can broker blanket loans, your portfolio stuff. If a person wants to buy 10 houses, we can do that. Do all these things, but what it boils down to is the consulting behind it, regardless of the product that we close. And that's how we get paid. And the thing also is helping people understand where investors do best in real estate. Now, one thing that I love to preach is good judgment comes from experience, and experience comes from bad judgment. The problem of it is you don't know until you know. It's like, a great way to learn in grade school, but a very, very, very tough way to learn in real estate. I have the blessing of getting to see where thousands of people have made decisions about the real estate business, where thousands of people have actually succeeded, where thousands of people have failed in those decisions, and what they did to overcome or become more successful. I offer that information to my clients. When they ask a question, I don't tell them what to do. I give them stories of what I've seen other people do and exactly what the outcome is, so they can operate based on practical data, not speculation and theory. So as a result of that, that's how we built our business, is continuing to provide data that nobody else is willing to provide. They can get it. It's just hard as hell. It's so much easier to tell everybody I got the cheapest rates, I got the cheapest cost, and I'll refinance you later for free if the rates go down. That's all bullshit. Or take a 5-year arm right now and refinance when rates go down. They're not going down, folks. They're not. What we just experienced for the last 13 years is an anomaly, and I can show you all damn day long why that is. They are going up. They're going to stay up. That's just the way it is. And if you get a rate in the single digits today, count yourself lucky. The housing's going to go up. Rates are going to go up. It's just the way it's going to be. Get on the train right now to buy the investment real estate, because we are being turned into a subscription-based society, period. And a subscription-based society rents. If you own the real estate, you're one of those people that get to rent out, not be the renter.
Yeah, I was going to say, it sounds like if you're able to purchase, then you now become the, not employer, but you become the company basically. And that's something I've known about real estate for a while. It's something I've been interested in. I'm one of those that needs that education you're talking about, right? Because I've purchased 2 homes now. So I bought and sold my first starter home. And then basically what happened was, all luck of the draw, by the way, during that housing bubble pop, we had those rock bottom interest rates, rock bottom pricing. And we purchased a nice, of course, depending on where you're listening at in the country or the world, this may or may not make sense to you, but here in Texas, we were rock bottom prices. And that was a 4-bedroom, 3-bathroom, 2,400 square foot home with about an 8,000 square foot lot. And that ran me $125,000 in 2011.
Wow.
Beautiful deal, right? So we
Probably
got it. I think we were.
Home, right?
Do what?
It's a brick home, right?
It was a brick home with, some siding on it as well. But, starter home, very, very starter home. Like, this was not it's a big company, but they're known for like that KB Homes style of starter. Everything's a box and there's a bunch of boxes together and that makes your house. And then when the housing market took off during COVID and all the prices skyrocketed, we sold that house for $230,000 cash to a real estate investor who purchased with a 14-day closing is what they requested, and he wanted cash price, and so we went with that. We cashed out on about $130,000 in profit, paid off some debt, and then purchased our second home. And that's where we went from like a 5 or 6%, or it may have been like a 4 or 5% interest rate is what we had. And now we're down to that 3% interest rate. And then, of course, we paid a little bit more for our home. We got a 2,700 square foot house, same specs, but with an additional office in there. And, of course, my property now is a half-acre lot, so we're almost 20,000 square feet on the lot here in this neighborhood. And I paid $330,000 for this home. And then now, just in the 2 years we've lived here, the other homes without my yard are selling for about $430,000. So if I really wanted to be dumb, I could probably fetch $430 to $450 for it. But, we're going to sit tight for the next 20 years and kind of see what this housing market does. Because that's what scares me is I don't know. I'm not smart enough to say like, oh, yeah, I made really good investments on my property and that's why I made that money I made. I lucked out. I was a dumb kid. And my wife and I.
They're in the right window of time. As I keep telling everybody, There's no timing the market. It's no different than being a star football player trying to get on the highlight reel. You don't sit on the bench and wait for the perfect play to jump on the field. You have to have to get on the field already. You just happen to get in at the right time, right place, have that low interest rate. And let me tell you one thing right now, and I caution you to not go against what I'm saying. Never pay that mortgage off early. Pay the exact payment that they want for the next 30 years. Do not pay a single cent more. The reason being is what's happening with our dollar's value with inflation right now. Do you know?
Yeah. I mean, the value is dropping
significantly. So as you pay it, every time you give them the dollar from the month before, it's now worth at least 0.666% less than the month before. Yep. At least that much. So because of that, you're going to pay back less than what you borrowed over the 30 years. You may pay, let's say a person buys a $200,000 house, they put 20% down, they have a $160,000 loan. You may pay, $402,000 in principal and interest in today's rates, but the value of those dollars over that 30 years is equal to less than what you borrowed. It's $152,000. I have an app that you can go to your app store and download. It has the calculator in there to calculate that for you. That's my app. I had this created so you can see what the time value of money is. Never pay them back more than what they want. And never get a shorter loan than 30 years. And never get one that has an interest-only piece to it. That interest-only is how they make their money. And then they convince and just pound you with marketing to refinance after that first 5 years. Or in these interest-only deals you have right now, there's a 40-year interest-only where it's 10 years of interest-only, then 30-year AM. They will get you in that first 15 years, and you'll refi, and you'll get stuck, and you paid nothing but interest. Don't ever get suckered by that.
That's crazy. I mean, it's such a simple thought, but yet so mind-blowing because I'm stuck on it, so I need to understand this. So it's more of a question than a statement. But, my thought process has always been the earlier you pay it off, then the more interest you're going to save. So this calculator, does that kind of allow me to make that educated decision of, hey, I need to pay it off in that 30 years because with the rate of, deflation in the amount of value in our dollar, I'm going to save X amount of dollars and then compare that to the number of extra interest I would pay if I, paid it off in 30 years versus 15.
Yeah, if you paid it in 15, what's interesting, when you run the numbers on it, you actually pay more in 15 years because you're giving them the money while it's worth more money.
Right.
Now, the amount of capital that you would have taken or that you do take to be able to pay it off in 15 years, the increased principal, if you reinvested that somewhere else where it compounds for you, you make money there while you're paying off your mortgage here, and you literally end up with money in your hands rather than just a paid off mortgage. You eventually have a paid off mortgage, but one leaves you with capital over here, investing and growing and compounding, while this one just leaves you with a paid off mortgage. Either way, you still have a paid off mortgage. One's going to give you capital, one's not. The other thing of it is think about how often people refinance their houses. Have you ever really paid attention to how often people refinance a home?
I have not, just because I never qualified to refinance. I was lucky to get the house I got.
And it's not your space, right? It's about every 4 to 5 years. So what people don't realize is when you think about it, what does the first 5 years of a 30-year fix look like?
As far as nothing but interest payments, and
it's practically all interest, right? The majority,
right, absolutely
interest. Well, if you can convince the general population to refinance every 4 to 5 years, all they're doing is paying interest. So I had a client of mine had a $120,000 mortgage. He came to us after 48 months. It's like his 47th month or something like that. He goes, I want to refinance because the rates are down. I'm like, how much cash do you want? He goes, none. I just want to get a lower rate. I'm like, dude, don't do that. Pull cash out, reinvest it somewhere, make this grow for you. He goes, nope, my dad said and my banker said and everything I've ever heard advertised says refinance if the rates go down by at least X. It's at least X, so I'm going to refinance. That's what I've always done. Well, he paid almost $37,000 over 48 months on this mortgage. But the balance had only dropped by $6,200 or $6,800 or something like that. Yeah. By the time we were done with the refinance and the costs and the prepaid interest and all these things being added back onto it, the balance of his loan was within $102 of the original balance. He got nowhere. And then he was happy. I'm like, dude, you got to do it. I couldn't convince him because he has been wired so hard to do it that way. And so what happens if he stays in that same pattern over 20 years, he'll have paid over $180,000 in just straight interest and still has a $120,000 loan. Who do you think's winning?
Yeah.
The bank world is winning.
Because you're 100% right. What is bred into us is save, right? If you want to make more money, then save your money. And then it's kind of considered that like the Grant Cardones of the world are crazy because they tell you don't buy things you can't afford and don't buy things that are not making you money. So for instance, a house could be a bad investment other than the fact that, yes, you do need a home. So do they penalize you for that in their thought process? Not terribly, but always spend your money on stuff that's going to make you more money, and saved money is not money that's going to make you money. Like I know I keep just saying money over and over again, but if it's saved, it's not being spent. You're not purchasing anything that's going to increase your capital and move the needle. That's the fact of the matter. So you're buying a house. It's already not the best investment whenever you're thinking about the fact that it's not going to make you money unless you were doing business with someone like you who is teaching you how to make real estate into an investment. So when you're buying this money, you're throwing the money away, quote unquote. But if you can just stick to those 30-year terms and then finance it, who cares if you paid extra? Because like you said, with the value of the dollar going down, and then in the end with you, instead of paying the extra money to your mortgage so that you could save money in the long run, now you took that money, invested into something that's making you money, and it's all a wash. So in the end, you wound up either breaking even or actually doing better by just paying out the 30-year mortgage anyway. And then you also created something that's going to generate more income. And down the road, if it generates you enough, you could just pay the shit off early because you can just give them a cash payment for the rest of the balance anyway. So it's like people say in life, some people are walking through life playing checkers and other people are walking through life playing chess. And that's chess. How do you get back at the big banks? How do you get back at the people who are making the money off of the people that need a place to live? This is how you do it. Like you said, I love it. It's mind blowing, but it's so simple that it shouldn't be. It's something I should have seen already, but we're brainwashed into buy a house, have a picket fence, have kids, have cars, make those cars on car note payments, make that house on a mortgage payment, put yourself into debt that your credit score can be higher so you can get into more debt. And it's like, we don't see this hamster wheel where we think we're going, 500,000 miles a second, and really and truly you're not moving anywhere, or you're rolling backwards.
Well, we're conditioned to think a certain way, like you said. And guys, don't think I'm going to shit on somebody for having that type of lifestyle. It's like, listen, I just want to go to work 8 hours a day. And on Friday, I want to come home. I want to get some pizza. I want to sit on the driveway while my cooler, watch the freaking game with my neighbors, and just spend the weekend there, and then get up on Monday and do it again. They have no worries. As long as you have a good job that pays you to do that, you have accomplished your goal in life, right? If that is your ultimate lifestyle, have at it. That's not my lifestyle.
100%.
I can't stop. I keep just grinding and grinding and grinding, trying to think of what ways can I make it harder for anybody who does the business that I do to follow me. I keep looking, okay, I'm gonna reroute how to get up Everest, because this route's way too damn easy. There's too damn many people. I want to take a different route. And I want to make it so treacherous, so rocky, so nasty, and have so many damn poison serpents on it that nobody wants to follow me. And then when I get there, you can't just relax and take a selfie and then, have ship in some food and now you're done. There's no such thing as being done. That bitch will kill you. You got to get your ass down and go find another goal and keep grinding and keep going. When I say, when I go to the grave, I'm coming in hot, there's no such thing as retirement for me. Right. The ultimate goal cannot be achieved in my world. It won't be achieved in my lifetime. Let's put it this way. Ultimate goal for my business is, my business name is my name, just Aaron Chapman. So when you think of Charles Schwab, what do you think of?
Money,
right?
Yeah.
You think of a business that does trading on the market, right? Helping you trade and interact in stocks. You don't think of a person. You didn't see a person's face when you thought Charles Schwab, right?
At all.
Eventually, this face will die and fade and just rot in the ground. I want that name to endure as real estate investment finance. That's what I want that name to endure as. So when you hear that name, it's like, oh yeah, that's that group that does real estate investment finance and all types of finance. But we focus on the real estate investor because that's the hardest type. But we help anybody get into a house, anybody get into vacation properties, buy rentals, all these things, house hack, all the crap, BRRRR strategy, you name it. We're the specialists in all of it. There's not a single person on this planet that does my role that can hold a candle to my team. There just isn't. I'll go Pepsi challenge against any some bitch that wants to claim it. So ultimately, that's the goal, that we serve our community and help them become better equipped to do exactly what you're talking about, right? To hack through the whole system and understand how the system works. We're not going to touch but maybe a fraction of a percent of the people out there doing this. So we're not going to impact the banking world. The banking world, I'm not even a blip on the radar of these some bitches, right? They have completely brainwashed the common public to serve their needs. We are literally serfs to their bullshit. I'm the one of the few guys out there screaming something different. They may silence me someday, but it's probably not going to happen in my lifetime.
Yeah, I mean, they make way too much money off of it, and it's like it's similar to a cult, right? When you have them brainwashed so much, you're not going to change their mind. So, no. It's something that I have seen even on this podcast. I had a digital nomad, and she's like, "Yeah, I work from wherever I want to live from for that day, week, month, year, 6 years. I just move, go there." And I was like, "Yeah, I wish I could do that. That'd be so much fun." But I have 3 kids, and she's like, "Okay, so why can't you?" I'm like, "Well, because I have 3 kids." She's like, "Okay, so why don't you take your kids to Gettysburg instead of them reading a textbook about Gettysburg? Why don't you take your kids to enjoy the world?" She's like, "You feel like you need a house with a picket fence and 2 cars and your hobbies and a Monday through Friday 8 to 5. That's what you feel like, but you don't have to have that." And I was like, man, again, so simple, so correct, but so mind-blowing. And honestly,
get out of your programming to do it, right?
Right.
Yeah, the only reason I'm not doing that exact thing right now is same reason, wife and a kid, right? I've got 4 kids, 3 of them moved on, they got their spouse, whatever. But my wife wants to have in the house, wants to live this way. This is the way she wants it, right? If for some reason she changed her mind on that, and I would literally be in the Jeep with that trailer. I've got the RV Starlink. I can do my shit from anywhere. I can be down in a canyon. I can do what I got to do. I would be set up, but I have not convinced her well enough to do this.
Yeah, man, I knew I liked you. Ride motorcycles. My first was a 2013 Electric Glide. I got a Jeep 2017 JK out in the front. So
I got like 5 of those damn things. I haven't ridden in a long time. That accident really changed things for me on that. I had a 2008 Crossbones on on order. I had a Road King that I destroyed on that ride. But I've got rock crawlers and Jeep. My main Jeep right now is a 2004 TJ or the LJ, the longer one with I've got an LS3 in the sumbitch. It's got it is so rotted out. It will go on the road just fine. It's not really happy on the road, but you get that on the rocks, and it'll get anything done. It's there's probably 150 grand tied up in this damn Jeep.
Golly. Yeah. They're awesome though, man. I truly enjoy them. So I know we went off on a tangent. I think it was a great tangent. So freaking informational. I could end the podcast right now and the majority of the listeners probably are happy with it. But I want to go back to that transition from working for someone and kind of basically what did you do? And then not only that, but what was going through your mind and why? Like why make that jump and say, I want to do it for myself? I know that obviously you're driven by, I want to make more money. I want to work for myself. You have an entrepreneurial spirit to you, but, was there something that was lacking in the market that you felt like you were bringing to it? Like, why do business with you?
So the jump part of it was I hated that other people had control of my day. I hated that I had to be at the yard at a certain time. I hated getting up every morning and put on those boots in the dark to go out there and sometimes work till it was dark. For what? I was working for something that was just making somebody else rich. Those are the guys, the owners of the company, which were great guys. They were awesome individuals, but they would roll up with new boats and new trucks and all these things. They go, their truck got 50,000 miles on it. They go pick up another one, take it right to the custom shop, get stuff done. They come back and they've got this kick-ass new truck. And God bless them for doing that. They suffered a lot to build that business. I'm like, I need to figure out a way to do this myself. And that's where this opportunity came along. I didn't want to go backwards. It was hard. You had to endure the crash of 2008. Right. So after, first you had the .com bubble situation, then you grinded through that. And then you had to just build the business up, period. And then you've got the crash of 2008 where I wake up in the hospital with 17 broken bones, one collapsed lung, and a memory that only lasted 3 minutes. I had to cycle through that, had to come back to a completely obliterated industry. All my net worth was gone. I went from a net worth of over 3 million to a negative net worth of 1.5, and I had to rebuild from there with a complete change. And that was when the investor was coming into Arizona to buy those cheaper houses. And then he went to Indiana and Texas and Missouri. And I had to build and build and build and try and target those guys. They were the smallest loan amounts in the business, so nobody wanted it. Now it's like the only business in the business and everybody wants it. So I'm now have to fend off all the assholes that want my business that I've been building for the last 20 years. So then you come back from all that, and then you go through, you hit the pandemic, and it completely freaked everybody out. So I decided to get on social. First time I got on social media was during the pandemic because I had so many clients asking questions. I had to talk to them somehow. So that went to YouTube, and that went to all the other mediums. And I can't stand social, but that's what I was doing. And then from there, it's just digging in through this tough time right now. I've had to restart my business 3 times in my career, and so it's a matter of never stopping and never slowing down. So as far as what we offer to the market, like you just said, what's different about us? Shit, if you can't see that by looking at me and talking to me, then I'm doing something wrong. The other thing is our experience. We know things better than anybody else does because we focused on the one thing for so dang long, more so than anybody else. They have bounced from different parts and different types of businesses through this whole time. People are focused on refinancing because they're easy, focused on first-time home buyers because it's easy, focused on low rates because it's easy. We've done nothing but just clawed our way through the toughest kind of business ever since I got in the industry and really started focusing on the real estate investor in 2003. And we know more about it than anybody else does. We've pumped out more successful people in real estate, starting with single family homes, than any other team that's out there in our industry.
So I know you service obviously everyone, like you said, you can handle anything, but specifically on the real estate investment side or, and then again, maybe in any capacity, how do I know if I'm a good fit to be your client? As far as especially in the real estate investment side of things, how much capital do I need to start doing something like this? How do I need to be set up in life before I'm ready to have this conversation?
Really, the capital, I wouldn't say it's irrelevant, but it's the desire for the capital, right? The one who wants to go out there and find it. We can't just create capital out of thin air. Some people come and say, hey, I hear you're great and that you can come up with creative ways to do stuff. I can't create, I don't have money tree seeds to plant. It doesn't happen that way. You've got to figure out how to get your capital yourself. But ultimately, it's do we get along? I would say the conversation we've had today would say that we would probably make a pretty good fit to do business together. My initial conversation, I don't talk about interest rates, I don't talk about programs. I spend that first 30 minutes with that person who wants to get started in real estate investing, understanding what they know and sharing with them what I know and seeing if there is some continuity. If there's no continuity between us, we shouldn't be doing business together. If they go to my website and say they got some bald-bearded redneck on there and they don't like the look of me, then go somewhere else. But we need to have at least a foundation of business together by knowing we get along. And then it's going to develop into trust. And to me, that's the paramount thing. Earning somebody's trust with their business and with their livelihood and with their family's future, that's massive. And it gets deeper than just doing the loan. We talk about the infinite banking strategy. We talk about setting that foundation there first, utilizing that life insurance to build that foundation for your family so you can invest and you can grow your life and grow your capital and live it to the absolute fullest. When I die, I will spend every single cent that I have, that I created. If I'm down to my last couple bucks, I'm disappearing into the wilderness of Alaska, I'm covering myself with blood, I'm grabbing my pistol, I'm going bear hunting. Somebody's coming out alive and somebody ain't. So I'm going to spend my last dollar. But my kids, when I die, they get left with those hundreds of millions of dollars that come back in, or tens of millions of dollars, whatever it is, for my death benefit. It ensures my ability to spend my life the way I want to, expounding all my resources the way I want to, and then they will have more than enough with the trust when I leave. And that's where I train all my people.
Yeah, and I love that, and that's exactly where I wanted to go with that, was the training. So you're a wealth of knowledge, obviously. Where can I connect with you? Where can I find this information from you? How are you in the free ways, or the ways that I can spend a little bit of time or maybe a little bit of money on something that you have? How can I learn from you, and what should I do?
So you can go to just my website, aaronchapman.com. That's the easiest way to find me. There's a media section there. I've been a guest on well over 200 business podcasts. There's a video section. I put out 2 YouTubes a week on what's happening in the market and how it affects you as a real estate investor. I also have 4 books that are on Amazon right now. There's little books, nothing extreme. I took 370 pages. I broke it down to 30 pages a piece. Wrap each 30 pages. It's a chapter with its own cover. So you just get the one lesson and get out, right? Got another one that I'm working on that's going to be about 115, 120 pages. That'll come out probably later this year, early next year. Right now, the artwork is extremely involved. I didn't expect it to be involved, but the artist has taken the writing and decided to get crazy with it, which is going to be an amazing book. And it's going to be, the forward is written by Robert Allen. Look him up. If you don't know who that sumbitch is, man, he's got a lot of, he was the OG when it comes to real estate. That guy, there's few people who have accomplished what that man's accomplished. So, there's ways you can get to work with me before working with me.
Heck yeah. No, I mean, like I said, you're a wealth of knowledge. So just picking up any of that stuff to better prepare someone who is looking forward to working with you. Is there anyone that you're not looking for as a client specifically? And, even if it's located to location, like, can you help anyone across the United States?
I'm limited just in what states I'm licensed in. I'm licensed in 30 states. There's some things in the Northeast I can't do, like New York and New Jersey. Unfortunately, those are some big places. But they're just, on the website at the bottom, it shows the licenses that I have. You can also, guys, if you're interested, go to your app store and look up the QJO investment tool. You can download. That's the app I referenced earlier. Shoot me an email. I'll get you the videos on how to use it. In fact, I'll just shoot you the videos, John. You can put that out in the show notes. So that way they can download the videos and watch how to use it. It can be complicated, but these are calculators that we use for investors in the lending world. And then I had the calculator created by the professor of accounting at Kennesaw State University that incorporates the time value of money. So again, look for the QJO investment tool. It stands for the Quit Jerking Off investment tool, which is what I say people are wasting time on looking for interest rates.
Yeah, I mean, interest rates, big thing in my mind, and then. But I don't know what to do or what to look for enough. I always tell people it's like me working on my Jeep alone, right? I'm not a mechanic, so I'm not totally comfortable with it. I know enough to get myself in trouble, right? So I've been lucky the past 2 times that I've had to dabble in the real estate market, and I would like for my next time to be from an investment perspective and to be a whole lot more educated about it. So unless you have something else you want to just get out to the world, man, I think this has been a great episode so far.
Well, the only other thing that's left really is, guys, when you're buying investment real estate, it's not about what the interest rate is, what the price is. You have to be in a place that you can find that you can keep reasonably rented and that you can raise rents on it, period. If you can do that, and let me just drop a teaser in here. If you can do that, you literally, before any cash flow on this property, you can make 10.6% on your initial investment just by somebody else paying off the mortgage, just keeping it reasonably rented. And then if you're in a place where you purchase it where the property value at least increases by at least 2.5% per year. If it doesn't go up 2.5% per year or more, don't touch it. But that's a really, really conservative number. Property value going up 2.5% per year, that's another 10% increase on your initial investment. Approximately, that's 20%. Above 20% increase on your initial investment on that property before any cash flow and before tax benefits. It gets bigger than that. It can be hundreds of percents. If you want to understand how that works, and this is passive, this is just what the baseline is, 20% by keeping it rented and being in an environment that raises by at least 2.5% per year. If that intrigues you, reach out to me. Go to aaronchapman.com, go to the comment section. Hell, you just look me up online. Google Aaron Chapman. You'll find only one bearded redneck with a braid on his face, and just reach out to us. We'll schedule a time and I'll tell you exactly how to get that. And it's very, very achievable.
That's amazing, man. It's been a great conversation. I truly appreciate your time and coming on the show and sharing this with everybody today, because it's just been awesome. So this has been a great podcast episode. I've learned a bunch on it, and I definitely look forward to connecting with you. And of course, we're going to link everything we talked about in our show notes. So absolutely, if our listeners want to connect, we will make sure they have a way to get in touch with you for sure.
Find the bearded redneck with the braid. That's ultimately how you know who you're dealing with, right? So you can email me. You can go to my website, aaronchapman.com. You go to the you can actually, when you download the app, in the upper left corner is a little question mark. You click there, it'll take you right to my website, right? Hell, text me. I don't give a crap. Here's my cell phone, 602-291-3357. 602-291-3357. It's my personal cell phone. Shoot me a text. Say, I heard you on the podcast with John. Love to talk. I'll shoot it to my assistant. She'll personally reach out to you and schedule a time to talk with us. The reason I have her do that is because I want to make sure that I set aside the time for that half hour, 45 minutes or hour, whatever it is. So I block the whole world and I can talk to you. That's it. That's all I want. As long as we can sync our calendars up, it's perfect.
Thanks for listening to another episode of Small Business Origins.
I love an origin story.
If you like what you just heard, leave us a review, subscribe, and share with a friend.
You guys, check this out.
They're going to love it. You're going to love it.